So I was saying that at your level, okay, you won't get functional budget as functional budget, but it will be used. You will need that information to prepare what? A cash or master budget. Because at your level, the calculations are mostly cash and master budget, but you still need functional budget. Let me explain. Now, anytime you want to start preparing a functional budget, please, somebody's background is noisy. Anytime you want to start preparing a functional budget, it always starts with your principal budget factor. It always starts with your principal budget factor, okay? And then we prepared this budget with our principal budget factor. Now, the principal budget factor is simply your limiting factor. Are you getting it? What limits you based on what you have? That is what you are going to use to prepare the budget so that you are within the budget. For instance, look at this. If only 4,000 people can buy my products, right? Then I have to prepare my budget based on the 4,000 people who want to buy my product, so that I work back to get how much I should produce to meet the 4,000. Does it make sense? Does it make sense? Does it make sense?
Yes, sir.
Yeah.
Yes,
So I'm
please.
saying that, look, if right now I want to produce some units and I know that 4,000 people can buy my books, then I can use the 4,000 as a budget and work my way down to know how much I must produce, how much raw materials I must buy. So usually this principal budget factor, mostly you will see it as sales demand. But it doesn't mean that it's always going to be sales demand. It's a limiting factor. So it can be labor hours, it can be machine hours, it can be production units, it can be anything. But mostly you start with your sales demand, right? Once you know this principal budget factor, the next thing is to use it to what? Determine the principal budget. So if sales demand was your principal budget factor or your limiting factor, then you will get your sales demand. Are you getting it? And that sales demand can lead you to the sales budget. Actually, when we say a budget, is the total that you are looking for. So your sales budget is the first one, where you just multiply this sales demand by your selling price per unit. Make sense? That's it. So once you know your principal budget factor, you go on to prepare your sales budget. And from the sales budget, or this sales demand, is birth all other budgets. So from this, we can use this sales demand, to come and get our production budget, which is how much, like our production units that we need, right? And how do we get our production budget? Now, let me explain to you. You remember that if we are doing production, right? Let me explain something to you. I'll show you a simple way. But then, you know that usually when we are producing in units, what do? We ask ourselves, do we have any opening stock of inventory? Do you remember? Do you remember? Then after opening stock, we'll come and what? We'll come and produce more, right? Then this will become the goods available to sell. True or false? Meboa. Then what happens? Then you take the one that you have sold out. Then what happens? You come and get your closing stock. True or false? True or false?
True.
It seems some people don't understand what I'm saying. Look, I make clothes for sale as a tailor, right? Definitely. From last year, let's say I had 10 jeans left. This year, won't I produce more jeans? This year, won't I produce more jeans?
Yeah.
I will. So let's say I produce 100 on top. That means I have 110 jeans available for sale, right? So if I sell 90, it means that I have what? I have 20 jeans left as my what? My closing stock. Does it make sense? Does it make sense?
Yes, sir.
Yes, sir.
Now look at something here. Now they didn't give you this one, but you know that they've given you the sales unit, which is what? 90 units, right, of jeans. And you know that your opening stock is what? Our opening stock is what?
10,
Our opening stock is 10 units. And then our closing stock is what?
20.
20. So they want how much we should produce, right? How do you get how much you should produce? You can put it in this formula I taught you and work back, but it can take time. So what you can do is that you can say, okay, your production budget, okay, is simply your sales unit or your sales demand plus your closing stock because you are working back, right? Minus your opening what? Minus your opening
Yes.
stock. Do you understand? And this will give you the same thing as your production. So if we want our production, then we know we have 90, but we took something out, right? So we added back plus 20 minus our opening stock of what? 10.
10,
What do you get?
100.
100. And truly, is it not 100 that we produced? Is it not 100 that we produced? Yes. So you see, we get it back. So you can use this and then you work back and get the missing figure, which is the production unit. That's what we call the production budget. And the production budget is the chief budget that can give you all other budgets because everything is based on production. Let me explain. Based on production, I can get labor budget. Look, my labor budget, I'm simplifying it for you. Your labor budget is just your production units times your hours per unit. Do you get it? Because labor is based on hours. No be so. So you see how it is. Overhead budget, the same way, is your production units by what? Your hours that are used for overhead per unit. That's your OAR. You see, it's still based on production unit. Raw material usage. Raw material usage, the same thing. It is your production unit by your raw material unit per unit per raw material, let's say kgs per unit. So have you noticed something? What is the most dominant factor among all of them?
Per unit.
No. What is the most common factor among all of them? It's not per unit.
Production.
The
The
production.
production units.
It means that in management accounting, they give priority to the product because almost all the production costs are based on the unit of production. It is a way unit of production in year or budget ni na be wrong. That's why I always tell my students that budgets can be frustrating. They are the only area that can can mess you up completely. So it should be your last but one question together with decision making. Is it clear? Is it clear?
Yes.
Good. So this is all I want you to know. As the rest, we build momentum as we go by. Do you want to write this down or we can just start solving questions? Or we can just go.
Yes, please.
Okay. So in that case, let's look at this one. Sales budget. Dahlia. Dahlia. Dahlia Limited makes 3 products, Colorette, Pom Pom, and Cacti. You can see. You can see. So it's just an illustration example. Okay. So they said we should prepare what sales budget. So sales budget is straightforward. That's our total sales, right? And you've already been preparing budget from the start of this class, just that you didn't know it was budget. All those times we were finding total cost. They were all budgets. Do you get it? So for Dahlia, Colorette was what? Was 2,000 cedis at what? 100 cedis per unit. Mewa. Pom Pom. That's 4,000 cedis by what? 4,000 by 130. And then Cacti. That's what? 3,000 by what? 150, right? This is how we prepare sales budget. Is this thing difficult? This is sales budget. And 1 year, your budgeted sales. That's your sales demand times. So how much do we get? So this becomes 200,000. Please be helping me with the figures so that we can go quickly. Everybody okay? 520,000 and then the I hope you can hear me.
So I'm muting me.
Yes, sir.
450. Okay, so that gives us what? 170,000. Okay. So this becomes our sales budget. Is that clear? Now, this is what you know as your sales on your P&L, right? So some questions you would have to go and get the sales this way. And sometimes they may tell you to do a forecast, meaning that this sales, they'll say is likely to grow at 10% every year. You know how to do it, or 10% per month. So you just multiply by what? 1 plus R. You guys remember, we know how to do increases and decreases. Then you use it to get for other levels. So that's how we get our sales. Are we okay with the sales budget?
Yes, bro.
Okay. Now, from here, what do we need? From sales came what? What's the next budget?
Production.
Production budget. So production budget, how do we get production budget? We said we take what?
Opening
We take
inventory.
our sales unit,
Sales unit.
then we add what? Our closing stock. Then we less our what? Our opening stock, right? Now note, this thing, sometimes the question will intentionally give you change in stock. What did I say?
Mhm.
It says sometimes the question will intentionally give you what?
Change in stock.
And this change in stock is simply your closing stock minus opening stock. So in that case, all you have to do is take the sales units and just go and add what? The change in stock to it. The change in stock is just closing stock minus opening stock, right? Sometimes they give you all the closing stock and opening stock. Sometimes they just give you the change in stock. So all you have to do is take the sales unit and then add your change in stock to it. You get the idea? That is it. So from here, I'll teach you how to deal with losses, right? Just like how we have losses in production, and then you come and understand how to deal with losses. Losses can be in percentage or they can be actual losses. No matter the case, if there's a loss, just gross it up. What did I say? If there's a loss, just what?
Wrap it up.
It means that go and add back the loss. That's all. To get the original budget. That's what we are looking for. If there's a loss, what? Add it back. If it's in percentage, get 100%. So let's say they said there's a 20% loss. That means whatever production you have is equivalent to what? 80%. So find 100. Do you understand? That's how simple it is. So in that case, let's see. How many products did we have? How many
Yeah,
products did we have?
3 products.
3 products. So what are they? Colorette, pom pom, and cacti, right? So there's no arrangement. You can choose your own arrangement, right? So maybe I can do colorette, pom pom, and cacti, right? Okay. So I'll start with my sales demand. What was my sales demand? Or sales unit? Colorette was how much? 4,000, right? Cacti, it was 3,000. Do you guys remember? It's the same question.
Red was 2,000.
Yeah, 2,000, yes. 2, 4, and 3. So colorette was 2,000. This was 4,000, and that was 3,000, right? Okay. So now that we have this, we are going to add what? What we add?
Closing stock.
Add our closing stock. So closing stock. How much was closing stock of finished goods?
600. Wow.
This was 600. This one was 1,000, and this one was 800. Then we less what? Our opening stock, right? 500, 800, and then 700, right? Okay. So that means we come and get our production units. or our production budget. This, you didn't give me the figures, so I've been waiting.
2,100.
2,100. Then this guy,
4,200.
4,200.
3,100.
3,100. Okay, good. So that's the production. Based on this production, we can use it to get any other budget, right? So we can use it to even get material budget, to get the materials that we need, the raw materials that we need. Do you understand? And look at the materials that they've given us. Already we know this. So we can do labor budget, we can do raw material budget. And raw material budget is just getting what? The materials that we need. And it's the same thing. Raw material usage, right? Raw material usage is simply what? The raw material units, or let's say kg per unit, it's not always kg, it can be anything, times the production unit, right? And once you get your raw material usage, you can come and get a raw material purchases budget, right? Raw material purchases. And you know, to get purchases, just like we did production, how do we get purchase? You know that when you produce, you purchase raw materials and use in production. Do you guys remember?
Yes.
Like we do production. So definitely, if I want to produce, I'll ask myself, is there any stock, opening stock of raw materials? Then what would I do? After I have opening stock, then I will use more, right? The opening stock plus the one that I will buy, right? So plus raw material purchased. You know, I may already have some plantain at home, but I bought what? New plantain, right? That will be the total plantain available to cook in the house. True or false?
That's true.
What I already had plus what I bought gives me what? The raw
Yes.
material available for production. No be so?
Yes.
Or available for usage. Then based on this one, what will I do? I'll now take out the one that I have used, right? Usage. Before I come and get any closing stock of what? Closing stock of raw material, right? You get the idea? So what are we actually finding? We are finding this figure, this raw material purchases. Okay, just like we did for production, purchases takes the same 10. It means that if I want to get my purchases budget, right? To know the raw material purchase, what I'm going to do is that I'm going to the same way take what? My raw material usage just like I took sales. Then I'm going to add closing stock. Then I'm going to less what? Opening stock of raw materials. The same thing, doesn't change. Once I get this, the raw material purchases that I'll get in Ghana cedi means I just have to take what? My raw material purchases in units times the purchase price per unit, right? I hope you guys get it. So this purchase budget I'll get will be in units. Then if I want the purchase budget in Ghana cedi, I just take my purchases in units times the price per unit. Then you are done. This thing, you have already been doing it in a lot of questions, but you just didn't know they were budgets. Now I'm just opening your eyes that these things are budgets. Do you understand? Do you want to put this down or we can just continue with the question?
I'm putting it down. Minute.
But you get it.
Yes, boss.
Good. Please, these are trying times, so last minutes. So if you don't understand anything, you are quiet, well, no one can save you. So you ask questions instead of keeping quiet. Please, can we move?
Yes, sir.
All right. So in that case, let's see. Now we have how many raw materials? How many raw materials do we have?
3.
3. What are they? Material 1, material 2, material 3. They are all in kgs, right? So let's go and get our raw material usage first, our raw material usage budget, because we must know how much we are using, right? So raw material usage budget. So I would say M1, material M1, material M2, and material what? M3. You can decide to arrange them according to product or according to material. It's up to you. I mean, there's no way I get it. So I will first start and say, okay, then I want what? Colorate, right? And say for colorate, for raw material 1, under colorate, what was I having? For colorate M1, I was using how many?
M1 is 5.
I was using 5 kg, right? But how many units of colorate am I producing? 2, 1. Remember, I
Yeah.
told you raw material, it's always your production units by what? The raw material kgs or units. Do you remember? So colorate, I'm producing 2, 1 by the 5 kg. What about material M2 for colorate?
2.
2 kg, right? But we are producing 2, 1 for colorate. Then material M3.
M3 is dash.
Okay, dash 0 kg, but we are producing 2, 1, right? Okay. So for colorate, these are the total materials for colorate. 5 by 5 by the 2, 1. That's 10,500, right? So 10,500. Then for M2, 2 by 2, 1. That's 4,200, right? But for M3, colorate doesn't have any, right? Then we go to what? Pom-pom. Now for pom-pom, for material M1, pom-pom, we are using what? We are using 3 kg, right? But we are producing 4,200. Material M2. How many kgs? You are the one going to write, so that's why I want you to be giving me the figures. I don't want to be picking them myself.
2.
2 kgs, okay? By the same 4,2, right? It's pom-pom. Then what about material 3?
Material 3 is 2.
It's still 2 kg. I hope you all know where we are picking the figures from. I hope you all know where we are picking the figures from.
Yes, sir.
I'm only hearing the same voices, so the rest, you are not saying anything. Two kg by 4,200. That's 8,400. Then 2 by the 4,2 again. That's 8,400, right? Okay. Then the last one is what? Cacti.
Cacti.
So cacti to the same thing, material 1. You see, all the things we are using in 1 year, we are just multiplying by the units produced. So
Yeah.
M1, 2, right? It's 2.
Yes.
So 2 kg. But how many units did we produce for cacti from our production? 3-1. No, so 3-1.
Yes.
Then material M2, 1
1 kg.
we produce 4-2. No, 3-1.
3,100.
Then M3, 3 kg. We produce 3-1, right? Okay. So that gives us 6-2,
6,200.
3-1,
9,300.
9-3, right? So that was our raw material usage. Are we okay? So that's the total raw material used. Okay. So what's our raw material usage? We can add up 10,5 plus 12,6 plus 6,2. 29,300 for this guy. And then for this guy, 4,2 plus 8,4 plus 3,1. 15,700. Am I correct? Then 8,4 plus 9,3. 17,700. So now that we have our raw material usage, how do we get purchases? How do we get purchases?
Multiply it by the price per unit.
No, this is usage. This is not purchase. I
So we need
have
to
to-
multiply the cost per kilogram.
But for you have to read it carefully. This is what you use. What's the relationship between what you use and what you purchased? You have to establish that relationship first. This is what you used. What you used, how can you put a price to it? You must get what you purchased. And I
Oh,
showed
okay,
you the
okay.
relationship here.
Okay.
That usage and purchases, they are far apart. See, this is what you purchased, and this is what you used. The only relationship between them is between opening stock, closing stock. So I told you anytime you have usage, you come and take the usage and add closing stock of raw material and less opening stock of raw material before you can get purchases.
Okay.
Please don't forget to. Usage is what you use. There's no price to it. It's the one you purchase that has a price. Because the one you use, you may have used some from the previous period and some from this period. So what price will you put to it? So it's only the purchase that you can put price to it. Do you understand? So this usage that we have now, we have to what? We can get our raw material purchases by adding what? Our closing stock. Are you getting it? And less in opening stock. But are you okay now?
Yes, please.
Please don't forget, purchases is just like production. Always have it in your head. That purchases is just like production. So always when you take whatever you have from the top, you are going to add your closing stock and less opening stock, right? So this raw material purchases, I'm now going to start with what? This one was what? Material 1, material 2, and then material what? 3. No be so. Are we okay? So in that case, for usage, our usage was what? 29.3, 15.7, and then what? 17 what? 7, not so. Then what are we going to do? We are going to add closing stock of raw materials. Was there closing stock? Was there closing stock of raw material?
Yes, sir.
Yes. 18,000,
18,000,
9,000,
9,000, 12,000.
and 12,000, right? We add. Then was there opening stock of raw material?
Yes, sir.
Yes.
So 21,000
21,000 for
then
M1.
and 16,000, right? That's all.
10,000.
Yes,
Yeah.
and that now gives us our purchases in what? In
Include
kg. Do you understand? So these are purchases in kg now. But purchases are usually in Ghana city, right? So they must give you the cost per unit for each of them. Do you understand? So what's our purchases in kg now?
price per unit.
How much?
Only 6,300
26,
for
300.
M1.
And then the second one? Please, you need to speed up.
14,700.
Okay, and the last one?
Lock the phone for me so I will get a call. I'm going to look at my bag. The charger is there.
The last one?
13,700.
13,700.
Okay, so now we multiply by the price per unit. Then we get our purchase budget in Ghana city. Quickly, quickly, quickly.
Material M, 54,800.
M1. Okay.
Material M, M3,
Mm-hmm.
54,800.
So we've gotten our purchase budget in Ghana city. That's what we've done, right? So that is it. You are done. This is how raw material usage and purchases, usually that's where the issue is for people. Are you getting it? But gradually, are we getting there?
Yes, sir.
All right. Okay.
Mm.
So now let me just give you this, that there are
Put a fan out for me.
2 grades of labor, right? We have skilled labor. Are you getting it? You have skilled labor. And then under skilled labor, we have colorette, pom-pom, and cacti. Okay, this is what we have. So that's skilled labor. All right. Let me do it this way. So skilled labor, this guy uses 2 hours. This guy uses 3 hours. This guy uses 4 hours. And then unskilled labor, we have 1 hour, 1.5 hours, and then 3 hours. Okay, so this is what we have. I say labor is paid as skilled labor 10 cedis per hour, unskilled labor 4 cedis per hour. Please, I want you to write this down. So required. Are you writing the question? So required.
Yes, sir. Sorry.
The labor budget
Hey, who is on social now?
and overheads budget. Okay. So you can put it down. There's a question. You can put it down. Let's try and see if we can use this information to get the labor budget and then the overheads budget.
Rough, can I scroll down? Okay, it's okay.
So can we move?
I'm putting it down.
Okay. We are mama swat.
The requirement, I don't need to
Yes.
labor and overhead.
The continuation from the other question that I framed right now.
Okay.
I can add more. Do you want more? Can we proceed?
Yes, please. I'm true.
So labor budget. The same way we add skilled and what? Unskilled. Is that not so? So just like we did for the raw material, it's the same thing. So colorate. For skilled, how many hours were we using? 2 hours. Not so.
2 hours.
But how many units were we producing for colorate?
2,100, 31,500.
No, production unit. Production. Remember, it's always
That's
hours
perfect.
by
Based on production.
production unit, right? Just like raw materials was kg by production. I told you all the other ones, they depend on the production unit. Unskilled. Colorate was using what?
1 hour.
1 hour. By the same 2-1. Do you get it? So always is that simple. Just take the hours used or the kgs used and multiply by the production. So colorate for unskilled, how many hours would that be?
2,100.
This one will be 4,200. This one will be 2,100, right? Okay. So let's go to pom pom. For pom pom, yes. 3 hours and 1.5 hours, right? So for skilled, was 3 hours by the 4-2. And for unskilled, was 1.5 hours by the 4-2. No so. No be so.
It be so.
Mhm. So what do we get? Six three. Then we have cacti. I hope by now you guys are all following. This thing is it difficult? What if there was
No,
idle
sir.
time? What if there was idle time? What do you do to it? Idle time is also a loss, Meboa. I told you anytime there are losses, what do we do?
We cross them up.
And add it back. So if the total labor hours were 4,000 and there was idle time of 500 hours, you are just going to add back the 500 to get the gross. That's all. So if there was idle time of 10% lost in the system, that means this 4,000 is equivalent to what? 90%, right? So to get 100%, what do? Just take this 4,000 divided by 0.9, and then you come and get the 5,000 as the what?
Each other.
As a gross. Then you use it. That becomes your budgeted labor hours. Okay. So anytime you see loss, idle time, wastage, they are all losses. You gross it up. Makes sense? Just like in variance, if you see a loss, you gross it up. It's the same technique. Makes sense?
Yes, sir.
I hope we won't forget to, because that's what you are going to meet this diet. 0.3. So this
Hello,
one's,
Prof.
yeah.
Please, the grossing up. Can you please
Oh,
take
but
it again?
if we say grossing up, it means that if what is given is 90%, then 100 will be what? I've taught this several times here. So if 4,000 is 90%, then the 100% will be what? If more or less divide, so it becomes 100 out of 90 times 4,000. That means it was at 90% capacity. You want 100%. We've been doing this every time, no be so. I told you anytime you see something at a different capacity, find 100 and put it down. So this gives us 5,000. And I told you anytime you have 90 and you want 100, equivalently, this is the same as just taking the 4,000 divided by what? 0.9. And this still gives you the same 5,000. Didn't I teach you this?
Yes, you did.
That's what I'm saying. When we say gross up, it means put it back at 100. Are we okay now?
Yeah.
Are we okay now?
Yes, sir. The question we asked.
Before I can't hear you.
Munda.
Your voice
That's
was
the
far
My
away.
question is, can you hear me now?
Yeah.
What I'm asking,
Samson, your voice is interrupting Purpose.
the question we are solving. So, if there was to be an ideal time, yeah, how would you have treated it?
Just a loss. So you add it back.
We add it back to, is it skilled or unskilled?
So the idle time, they'll give it to you for all of them, for skilled labor and for this one. So when you are doing this, let's say this was 4.2 plus 12.6, then there was idle time of 500 hours. So you come and add the 500 here. Idle time.
Okay.
Add it back.
Okay.
This becomes your proper labor budget. So this plus the 500. If it was in percentage, you can add the percentage back. Let's say 20 out of 90 times whatever figure. Then you get it. Then you add it back. It doesn't really tell anything. You get it now?
Okay. Yes, please.
Is everybody clear? Is everybody clear? Today's class was supposed to be exciting. No?
Yes, sir.
But yeah, you didn't. Okay. Mama
Okay.
nice. I mean, I make try exam. No, so me ma try me exam a real. See, you are the ones going to write. So the more you interact, the more you know. If you are quiet and you are just listening, most of you don't have time to practice again. So this is where you can get the time to practice. So we've gotten our skilled and unskilled labor, right? So this becomes our labor budget in what?
In hours.
In hours, yes. So that gives us what? Let's add up. 4, 2, 12, 6, and then 12, 4. 29,200. $17,700. Okay. So now that I've gotten it, what do I need?
Rate per hour.
The
Labor
rate.
rate.
Yeah. You see, these are the same things we used to do the variance. If this one changes from the actual hours used, then you come and multiply by the rate per hour. Then you get what? Your labor efficiency variance. It's that easy. Okay, so what's the rate per hour? This one we said we're paying them how much? 10. And this one we are paying them 4.
Sure.
So 10 cities, 4 cities. So we multiply and then we get the labor budget.
Two thousand.
29.
2,000.
And then the next one,
7,800.
7,800. Okay. So what's our total labor budget?
362,800.
362,800. Okay, good. Done. Right. Now we need our production overheads budget. Meboa. And for production overhead, what's the first thing that when you hear production overhead, it should come to your head?
OAR.
OAR. Thank you. So what's our OAR? Our total what? Budgeted overheads over our total budgeted. Here it was what? Unskilled what? Labor hours, right?
Labor hours.
I mean the question said we should absorb based on unskilled labor hours. And
Yes.
yes. So what's the total unskilled labor hours? It was 17 what? 700. We've already worked it. So in that case, our overhead budget, we have to allocate the overheads based on what the unskilled labor hours. So what is that? Total budgeted overhead. The question said for overheads, the total was what? 980,000.
980,000.
So we take this 980,000 and divide by what? The total unskilled labor hours of 17,700 per unskilled labor hour, right? Or unskilled hours. And that gives us what? 980.
5.37. 55.37. 55.4.
So 55 CDs.
37.
Per unskilled hour, right? Okay. So in that case, we can easily get it, right? We can easily get it. for unskilled hour. So we have to look at each unskilled hour that we had for each of the products, right? So that means for colorette, it will be what? 55.37, right? By
2,100.
2,100, yes. 2,100. Then for pom-pom, because this is a rate, right? 55.37 by the unskilled hour for that guy was what? 6.3. Then for cacti, 55.37 by 9.3, right? So what do we get? So we've got overhead budget for each of the products, but the totals.
116,277.
Okay, then the next one.
348,831.
Then the next one.
514. 514,941.
The one we put all together, we should get back at 980,000, right? Which is our total
Yes.
overheads budget. Okay. So now we are done with all of them. Not so. So all we need is to do a budgeted P&L, right? Or a budgeted income statement. So we'll take our sales, and sales, we have already worked for it, right? What did we get for our sales? This one will definitely give us a loss paying. Our sales was what? Started from somewhere. Sales budget was 1,170. Remember? Too small. So you see how we do it. So our sales was what? 1,170,000. Then we less what? We less our cost, right? So we have what? Raw material purchases. How much raw material did we purchase? Raw material purchases. We work for it. Do you guys remember? Raw material purchases. These are purchases. We need to add them up. That's how much? 131,500. Right? Anamebwa plus 44,100 plus 54,800. 230,400. The overheads are too big. Let's make it 98,000, right? So that at least we'll have a profit. I don't want a loss position. That means now what will our OER be? I think our OER will now become what? Will now become 5.553. Oh, because now it's 98,000.
Yes.
Do you all agree? So 5.53. So that when we work it now, please let's work it again. I hope you all understand what we are doing. Please, you shouldn't be in silos, because
Yes,
this
sir.
is coming. Yo.
So 5.54.
Okay, 5.5. Okay, we've already made a 5.53. It's the understanding. So let's just maintain the 5.53.
Okay.
So when we multiply, what do we get? But we know that here should give us back our 98,000, right? You guys understand? All right. So now raw material purchases. Yeah, adding in you're saying 230, 400, right? Then did we have labor? Labor. You're adding in you're saying labor. 362 800, right? The total labor budget. And also 362
362 800.
800. Then we have production what? Overheads, right? 98 what? Thousand. No be so? We put it together, that gives us our total cost. So you see how we use this to prepare a master budget. So your master budget is just your budgeted P&L and balance sheet. And now most of the time, I see they like to go straight forward. They don't like to stress you like the period before 2019 thereabout. So these are our costs. So that there was a net profit, right? So this is one way they can ask you the questions. You prepare the functional budget and come and use it to 478,800. So you are done. So you see how we use one way, and it can waste time. You know, this is time wasting.
Yeah.
Just to come and get your income statement and then your. Yes, my people, my people. Obi wa question Anna.
Hmm.
So they will be aiding. Nah, yeah, reserve a comment. Hmm?
Prof, man, who's selling price or questionable?
What's wrong with them?
Selling price.
It's the same question we built upon, no? The pom-pom cacti. This were the selling price information. We already had them. 2,000 at 100, 4,000 at 130, and 3,000 at 150. Hanamibwa. No, be so.
Okay. I didn't jump from the very beginning, that's why.
Oh, okay. So I'm now asking the question. So, will be any question, Emmanuel? Is everybody okay? Can we try more?
Yes, sir. Yes, boss.
Mhm. I'm looking for a diet like that where they brought this. Don't remember the diet. They brought something similar. Just don't remember. This hold on. It's loading. Let me pray. Whether is this diet? See this question. This is March 2024. You can see. You can see.
Yes.
Yeah.
Question where better come out. I just saw it. It looks interesting in my eyes. Squash Refinery has planned the following monthly sales for the first 4 months in the year. So we have gasoline in liters for the first 4 months, diesel, and the proposed ex-refinery prices are 12.5, 10.8 per liter for gasoline and diesel respectively. 1 metric ton of crude oil, when processed, can yield 2,000 liters of gasoline and 25 liters of diesel. The inventory policy of the company is as follows. So we have closing inventory at the end of the month. Finished products, twice of the monthly sales for gasoline and 150% of the monthly sales for diesel. Crude oil, 80% of the 837. The opening inventory are 200,000 liters of gasoline and then 180,000 liters of diesel. Crude, 140 metric tons. The purchase of crude is based on the production requirement of gasoline. Prepare the following budget for each of the first 3 months. Hey, sales for gasoline and diesel. Quantity of crude oil to be purchased. Oh, you are. This is also functional budget, virtually. You are getting sales. And the quantity of crude oil that has to be purchased. So what is the first thing we do?
Sales budget.
We do sales budget. So how do we do sales budget? How do we get sales budget? It is always what?
Quantity sold plus
No,
closing stock.
no, sales. So you said sales
Time-
budget. Actually,
Time selling price.
I'm selling price.
Sale.
Francis, okay.
My correction, prof.
Pacho, man, review, Pacho. Gasoline, diesel. You see what pressure can do. Please don't be pressured. We beg. To ensure whether we are on point. So for gasoline, right? I'll take what? Month 1, right? The first month. For gasoline, was 140,000, right? But the selling price was what? 12 cedis, 50 pesos. No be so. Then for diesel,
Yes.
100,000 by what? 10 cedi, 80 pesos. Do you all agree? Then month 2. There's
Yeah.
no one way of arranging it. You can arrange it anyhow you want. 200,000 times 12.5. Then this one. 130,000 times what? 10.8. Month 3. 220,000 times what? 12.5. 180,000 times what? Times 10.8, right? Yeah, so we can get the sales for gasoline and diesel, right? So this becomes the sales budget for gasoline and sales budget for diesel. And see all this long thing, budgeting one. All for how many marks?
Okay, teaspoon.
How many marks?
Is it 3 marks?
3 marks.
That's why I tell you, say budgeting. Me, I've done that thing over time and I know where I can waste your time. But it seems people don't listen to me. I hope this time people will listen. It doesn't mean you won't learn, or you will learn them, but they shouldn't be your areas of priority. It's 2.5 million. But I hope gradually our minds are coming home.
Yes, boss.
Yeah. $220,000 by 12.5, 2,750,000, right?
Hello, Prof.
Yeah.
Yeah, 4 months, but we did only
Please
3.
read the requirement.
The question says 3 months.
Okay.
Or 4,000.
Are we okay? Before, are you okay now?
Yes, please.
Okay.
Before
3
it's
months.
18, no, that's why.
What's that?
Before it's 18.
Ah, okay.
By this time, Saturday, any bro, no food.
Yeah. One way trash.
So our first 3 marks, Yenya. Now we are going to the hard ones. They said quantity of crude oil to be what?
To be purchased.
To be purchased. Now we know our units that we need, right? So if we want to get purchases, we first need what? Production. No, be so. You must
Yes.
remember the flow. It's the flow that will help you. So first, when you have sales, then from sales
Sales.
to production,
Production.
and production, you need raw material what usage.
Material usage and labor.
Oh, here we won't need labor because they are asking for the quantity to be purchased.
Okay.
Or you need usage before you can get purchases. So this is the flow, and that's what they are asking. It's good we saw this question. I never knew a question like this. They've brought it before. It looks interesting. But let's see the abrofo. So they are saying that one
Prof,
metric
we make
ton.
you.
What's it?
You see, we make my first MB.
March 24.
I wrote.
Wow.
When we are 20.
Don't worry.
I have 46.
Hey.
But now the whole program is Shandy. I just went to write.
Don't worry. This time, that's why we are learning together. Fiansha dear. Now, how do we get the production budget? We said production budget, we always take what?
A sales unit.
Then we what? We add our closing
We
stock.
less
We less our stock, right? Or change in stock,
yeah.
right? Depends on the question. All right. So in that case, we need production budget. So let me put gasoline here and put diesel here. Somewhat else here. So in that case, we know that our sales unit in it, we have it already. No be so.
Yeah.
This one, how we arrange it? That means you have to do it separately. And yes, arrangement never. Do you understand why I'm saying arrangement never?
I'm thinking, well, when we pick gasoline, we deal with it. I'm going to pick
Yes.
diesel.
Yes, sir. Enfa.
So that we can have month 1, 2, 3.
Yes. That's what I'm saying. So month 1, month 2, and month 3. So that here we bring the sales units, right? So 140,000, 200,000, and then the 220,000. Then we need what? Opening and
Yeah.
closing stock. They told us that closing inventory at the end of each month is twice of the monthly sales for gasoline and 150% of the monthly sales for diesel.
Any problem? No.
We'll do it. So crude. 1 metric ton of crude oil when processed can yield 2,000 liters of gasoline and 2,000 liters of gasoline and 2.5 liters of diesel. Okay, so this is raw material. That is raw material. Okay. So opening inventory. This is raw material. Crude is raw material. Okay. Now we don't need raw material because you are doing production. We need finished goods. Right. So this one belongs to raw material. So we are not concerned about that. Finished goods, twice of the monthly sales for gasoline, right? Okay. So closing stock. They say closing stock is what? Twice of the monthly sales of gasoline. So closing stock is 2 times 140, right? $280,000. No be so. No be so. Do you understand? So it's 2 times of monthly sales. Anna, are you guys flowing with me?
Yes, sir.
And the monthly sales for gasoline was 140. So twice of that monthly sale becomes their closing stock.
Okay.
Do you get it? And then opening
Yeah.
stock, they had already given it to us because there's no way we can get the opening stock unless they give it to us. They said gasoline, 200,000 liters. Some of them might did that. So now remember that closing stock for this month becomes what? Opening stock for the next month. No be so. So 2 months of these sales, 400,000 becomes our closing stock now. And this closing stock becomes opening stock for the next month again. Then 2 times of this month's sales becomes what? The closing stock again, 440,000. Where we?
Prof, Abotre. Please. I want
So
to
ask
go
your
back
question.
again.
Ask the question.
I want you to rewind again, please.
Rewind.
I want to understand. Yes, I want to understand the closing stock.
Almost say. No, they have told you closing inventory at the end of each month. Omwangaza no mama or heading. You can see, can't you?
Yes.
Okay. And they are saying that closing stock at the end of each month is twice of the monthly sales for gasoline. What is the monthly sales? 140 for first month, meboa.
Yes, sir.
So 2 times of 140, you're saying, and yet 280.
280. Yes.
Good. And opening stock, they have given it to you. So opening inventory, yes, and gasoline, yet 200,000 liters.
200. Yes.
And yet, how did we prepare production? By is it not sales unit plus closing stock minus opening stock?
Yeah.
So sales unit 140, closing stock 280, less opening stock 200. But opening stock for every month, doesn't it become closing stock for the next month? Closing stock for this month, doesn't it become opening stock for the next month?
Sure.
So this closing stock becomes opening stock for the next month. The same thing. So closing stock is 2 times the current month sales. So 2 times this, 2 times this. That's a 400. 2 times 220, 440. So where we? That becomes your production budget. The question is muda.
Radiation. Nyasam yao.
Oh, but it's straightforward, bro. For Anna Francis, and just straightforward, bro.
You see, to fail is just something small.
I say, yeah.
I'm saying to fail is just something small.
I said the
But
way people were
sometimes you
saying.
also have your
Is that
you have
sometimes
your plan
yourself?
in your mind. You have the plan, you have the game plan in your mind. You go and then you meet strange things and you are now to adjust and align.
Why do you have a game plan in your head? The game plan is always the same. It's like last night, people said the EVA is difficult. The EVA, hey, last night, people and I said, Charlie, the easiest paper so far. They're like, oh no.
How you go?
I was arguing with one guy last week. Then I showed him something small. He said, hey, paper, we're full. Oh, prof, I didn't pull my weight at all. I say, yes. Sometimes we learn the wrong way. It's about simplification. So I don't know whether I'm correct though. But yes, now that we have this, what do we need? Once you get production budget, what do you need? So I've gotten my first 4 marks. Once I get production budget, what do I need?
Usage.
Yes, usage. But
Usage.
then gasoline, I've done it. So now I need for what? I need for right? Diesel
For
to
the diesel,
one.
the same process, eh?
The same process.
Okay, actuation instruction.
Yeah, until we so you befa month 1 100,000.
100, 130.
1,000. And away 180,000. Okay. Until now, no, we need closing stock. But look at what they told us. They said it's 150% of the monthly sales for diesel. So our closing stock will be what?
150% of the
Yes. So this one by 1.5. So
monthly
100,000
sales
by
for
1.
diesel. So monthly
That's
sales.
150,000. And then the opening stock for the first month, they will definitely give you 180,000, right? You can see it from your opening inventory, 180,000. How many am I that? So opening stock, closing stock becomes opening stock for this month, right? So 130,000 by the same 150% again. 195,000. And this becomes closing stock. So 180,000 by 1.5 again. That's 270,000.
Exactly.
To where we
Yeah.
production budget for
So opening stock. When opening stock.
70,000.
$80% of the food. 80% of the required. Utilities. Food oil.
Okay. So I've gotten the production budget for both of them. Now, we need our raw materials what budget. And we know raw materials budget, it is what? Our raw material quantity times our production unit. Mebwa. And here there's only one raw material.
Prof,
Yes, boss.
Sir.
please go back a bit.
Mm-hmm.
Go from the 180, the closing
Closing
stock and the
stock.
diesel.
Closing stock. You don't understand. Which
I thought it's
closing?
195.
There's
From
180
under month
liters.
1.
It's opening stock.
Stock under month. Where is it coming from?
Then you again add that.
Samson, are you okay?
Opening inventory.
The issue
When
Okay,
200
okay.
liters.
opening inventory
180
are
liters.
gasoline, diesel, crude. So opening stock, we
So 1 meter.
were not there before the first month, so they'll give it to you. So they did.
Yeah.
Are you okay now?
So closing
And proceed
accounts
to bring
open.
in the
Yes, sir.
Closing accounts open.
that
Okay.
have been raised concerning
Please, are we all
the
getting it?
this other areas.
So IC has stopped examining the old way of budgeting. Now they go where you use percentages, you think. That is it. So now the only raw material we had was what? Was crude. Do you get it? So it's crude oil that we use, right? So we need the metric tons of crude oil.
So Prof,
Yeah.
the way you have written your raw material budget into bracket, raw material quantity, the way you have written it, is it allowed in the exam?
No, you write it in full. Me, I finished writing my exam. So I told you everything I write in shortcut, write it in full. Or you can define them. You say let RM be equal to raw material. But write it in full. Are we okay? But yes, in the bracket, you can write RM quantity by this because it's your working. You are using it that way. Okay, so gasoline for month 1, right? What are they saying? We should know how much raw material quantity we need, right? Let's try for gasoline. We know that we produce what? Month 1, how many units did we produce for gasoline? 220,000 what?
1,000.
Okay. But they are saying that 1 metric ton of crude oil, when processed, can yield 2,000 liters of gasoline. 1 ton is equal to 2,000 liters. 2,500 liters and 2,500 liters of whey. So you have to think, how many liters? Because they are saying that 1 ton can yield what? 2,000 liters. Mewa.
Yeah.
So if 1 ton gave 2,000 liters, then 220,000 liters, Ebema is saying, how many tons? So I just have to divide this by the 2,000 liters. Then that will give me how many metric tons I will have for gasoline in month 1. I know people will not get it. Let me explain. You are literally saying that if 1 ton gave us 2,000 what? Liters, mewa, then 220,000 liters that I have for the month 1 will give us how many tons? If more,
Let's divide.
let's divide. So you are literally saying the one you are finding is always on top. So if more, divide by less. So in that case, that means to get the number of tons of crude oil, you are going to take this 220,000 and divide by the 2,000 liters. Then you come and get the amount of crude oil that will be needed to produce. Right? So 220,000.
110. 110.
That means we'll need 110 metric tons, right? Yeah. For month 1. Do you get it? Are we all okay? Are we okay?
Yes, bro.
Okay. So why not just
Yes,
do
sir.
the raw material purchases straightforward so that we don't waste time, Anna? Because it's quantity purchase near Anka metric tons where I no. Then you just come and add.
I'm experiencing thunderstorm.
What's that?
But I'm experiencing thunderstorm at my area.
Sorry. Then we come and add our closing stock and just less what? Opening stock. No be so. Samokai say normally when we get raw material usage, we just add what? Closing stock, less opening stock. Then we come and get the purchases. Mokai. But the purchases will get to be in what? In tons. Not so. When we finish, then we could just come and multiply by what? The purchase price per unit. Not so. But this one is the quantity that we are looking for. So straightforward. Are we there?
Yes, sir.
John, okay. You've gotten our usage, but let's add closing stock. What's the closing stock? What's the closing stock for crude oil?
80% of the following month requirement.
So let's go and get all the month requirement. Then we can use it to work, right? So in that case, month 2. It was how many units?
320,000.
So we take 320,000, divide by what? The 2,000.
2,000.
Month 3.
260,000.
60,000. Divided by the 2,000 liters. So what do we have?
160 for month 2.
160 metric tons. And then the next one?
130.
130.
130.
Yes.
Okay. So these are the month requirements, Meboa. Okay. Then when we go forward, what becomes our closing stock? They say 80% of the what? The following month requirement. And I'm what? So closing stock for this month will be 80% of the 160 that I have here, which becomes 128. Do you all agree? Do you all agree?
Yeah, 128.
Yes.
So almost 80% of the following month requirement. This one is 80% of following month. So it becomes 80% of the following month. That's the 160. So 0.8 by 160. That's 128 metric tons. Then opening stock, they gave it to us as 140. Already in the question. See, opening stock, they did 140 metric tons. Some of them might that. So what's our purchases? 110 plus 128 minus 140. 98. Says here the match line. Says here the match line.
Prof,
Yes, please.
sir, please, sorry to take you back. The metric tons, please, how did you get it?
We used ratio.
Mhm.
I told you here
Another
that
is
1
the
ton is 2,000 liters, and we have liters, so you convert it. So if 1 ton is 2,000 liters, 220 will give us what you divide. So you divide each liters by the 2,000 to come and get the tons. That's what we're doing, and that becomes the usage for each month. Then they are telling us that the closing stock is 80% of the following month. So that means closing stock was 80% of the 160, right? The next closing stock is going to be 80% of the 130. Do you understand? And the next one is going to be the 80% of the following month, which we have to get before we can get the closing stock. So that one will take this 250,000. So let's just do month 4 because we need month 4, right?
Thank you. Thank you, sir.
Is it clear now?
Yes, sir, please. Thank you.
All right. So how much is the so this one we got 125, but we wouldn't need it for the question. We just need it to get our closing stock, right? That's one thing about budgets. Sometimes you need the next month to come and get the other one. So this one too, we need what? 80% of this month's requirement, right?
Hello, Prof.
Yes, boss.
Month 3 and month 4.
Mm-hmm.
If we use the 250, won't we be wrong?
Why would it be wrong?
Because when we are doing the calculation for the production budget, we did for only 3 months. That is the
Charlie.
the sales close.
Ayampa. That means we have to do all the 4 months. Hey. Hey. You see that thing, no? So we should have done it for all the 4 months. Do you get it? Because I see it for one bedroom. I won't say you have to do for. That's why they gave you 4 months. Yeah, na asked what thing. Because without it is true. Without the month 4, we cannot get the closing stock for this month. Asemo. So that means we need to do for month 4 too. Anna. Otherwise, you can't get for the closing stock for the month 3. Because it's 80% of the next month's usage. Anna Meboa.
Exactly.
Then let's do it. So this one, the sales unit for month 4. But even we can still do a shortcut, right? We can open brackets and do it because it wasn't really required. Can go and work for month 4 separately as a working. But anyway, let's see. Month 4 was 250,000, right? So this closing stock becomes opening stock here, 440. But where is month 4 closing stock?
500,000.
That's 2 times the monthly sales. So we take it out. What do we have for gasoline?
310.
310. Okay, so this 310.
Yes.
And on our CCI, that's our production budget. That's what we can use it to get our usage. No be so. So month 4 to be this 310,000 divided by the 2,000 liters. No, so I believe now it's clear. So we have 155,000 metric tons. So this one, we can take what? 80% of that 155 to now come and be what? Our closing stock for the previous month. So this one gives us 104. The third month, 155 by 0.8. 124. I see if we're more than papa. Hey. I reserve my comment. I can't comment. So opening stock. Closing stock for this month becomes opening stock for the next month, right? So this closing stock becomes opening stock for the next month. So this 128 now becomes the opening stock here. This one becomes opening stock here. So now we can get the crude oil produced. So 160 plus 104 minus 128. Yeah. 136. Coming. Guys, you can write, I'm coming in. Please, are we all okay? I'm back. So now you can do the same for diesel, right? No be so. We can do the same for diesel, no be so. Then we are done. The budgeting can be time wasting. But did we all understand? Did we all understand? Are we all okay? This one is giving me a response, though. No, ma'am, a response.
Prof, yeah, okay. It's well understood.
So you should give me a response. And yes, I may pon. Because you are the
Yes,
one
sir,
who
ma'am.
write the paper. To ma'am, a response. Okay, so this one is a cash budget, right? So we have an extract of The financial statement. Which date is this? July 2024. Cash budget. Let's see. 14 marks. Ha, that means the question will be home. I like it. I hope now budgeting gradually we are getting there. What date did I say it was?
July 2024.
Question number 2. Right. So question 2 is usually budget and then contemporary approaches, right? So you see 3 assumptions of throughput. So usually they like to bring 15 and theory 5 or 14 theory 6. Do you get it? Sometimes one thing you should notice that 5-mark theory here, you should crack it. Then you leave the budgeting and come back to it later, right? Sometimes you can get full budget, 20 marks, theory or calculation. You can still do it. So let's see. The thing about cash budget is that for cash budget, you are just getting what? Your cash receipt and your cash payment and reconciling it with the opening balance, right? So usually, if I have month 1, so let's call this M1, M2, and M3, right? Usually you have the total for reconciliation, right? So you have your cash receipts. And your cash receipt, there are so many things that go into your cash receipt, right? In exam, you do cash receipt, purchases or cash payments and know where you get your receipt and payment and post them. So usually the common one that you have is your receipt from customers, right? That is your sales. If you sell on credit, when are you going to collect it, right? So usually your receipt from customers. Then you have other receipts, okay, other monies that you receive. So you can have what? Investment income coming in, right? Investment income. You can receive dividends. You can even sell properties, right? Sell proceeds for assets. I mean, it depends on the question, right? You can have insurance proceeds. Any other income that you receive, right? Financing or operating activities, money's coming in, right? Refunds or tax credits. I mean, there are so many receipts, but once it's an income, as a student, you know what an income is, right? Grants can be a government grant receipt, right? It can be a grant income, whatever it is, right? So you can receive all these incomes. The whole thing is that once you get all the incomes, you just sum them up, okay? And then your game is done. Now, one thing you should note is that receipt from customers is where the workings are, because you have to adjust it, right? So usually purchases and sales has a lot of workings. Then you come to what? Your cash payments. Okay. Some people like to bring the opening balance first, but I like to do it under. So the same way, anything concerning purchases, right? So the same way, raw material purchases. You see, you can use the master budget, the purchases budget to work it. So sometimes this one, there can be a lot of headache. Okay. Then labor. Okay, labor payments. So if you pay labor wages, the wages, sometimes they will give you rules pertaining to the wages. So overheads, right? All these are payments. Machines, capital expenditure. So here, whether you buy new assets or you pay taxes, all those things are expenditure, right? Taxes paid, donations, any payment, so far as it's cash, right? Let's say tax is paid at the end of the quarter. So let me just bring it here. Insurance payment, anything you pay is a payment, right? So all the payments, mostly I like to put all of them in brackets, right? I'm going to show you a trick here. So once you are able to get all of them and you close them off, right? This now gives you your total what? Your total payments. Let's call it B, right? And our total receipts, we call it A. Okay, so Once you get this, and then the total, you are going to get your net receipt or payment, right? So this net receipt is your total receipt minus your total payment. So this total receipt and total payment, let's bring it here. So once you get your net receipt, you are now going to, sometimes I call it net cash flow. You are now going to add your opening cash and cash equivalent. So opening cash or bank balance, right? You add it here. Let's call this XA. And add it at the end, right? Because there's nothing, your opening is just one, and it affects the total column too. Now, if you add these ones, okay, you are going to get what? The closing. So the net receipt plus the opening should give you the closing cash or bank balance you are looking for, right? So this net receipt plus XA will give you XB. And we know closing for this month becomes opening for the next month. That concept, never forget it. So XB comes here, you add this and this, you get XC, right? This XC now becomes what? Closing again for this one, right? Let's say this becomes XD. At the end of the day, if you add this and that, you should also get the XD. So this will tell you that your cash budget has balance because XD will equal XD. So this is how I prepare cash budget. So once the total column and this side budget balances, it means that you have done your work. However, if you ignore the total column, no problem. You just work it, get your marks, and then move on. But cash budget requires a lot of workings. It won't be easy. It's a time waster. You have to think very sharp. Do you want to put the format down? Or we can go? Can start solving questions.
So let's start solving the questions.
All right.
It will pop up itself.
Please, is everybody okay now?
Please move down a little.
Okay, so in this case, the matter is
It's me calling him. Can we move? Can we move?
Yes, please, we can move, Prof.
All right. So, Upon Limited, right? Upon Limited, right? Then we say what? They say we should prepare monthly cash budget. And it's 4 months, right? So, for the first quarter, right? So we say cash budget for the first quarter of 2024. In that case, first quarter means we start from January, February, March, then our total. Do you all agree? Do you all agree? So in that case, what I would do is that I will start with what? My cash receipts, right? You can call it receipts, cash receipts. And then somewhere down the line, I'm teaching you because of exam. Somewhere down, somewhere here, I'll just come and put cash receipts. Why? Because cash payment. Because there are some easy marks that I can always pick up. Do you get it? That's my style. Cash payments. So I can pick some easy marks. So as I read, I pick. So you first start by what? Running through the notes. Payment arrangement with customers is 40% down payment now. So 40% down payment means that is what? That is cash sales. Do you understand? So if you do 40% down payment, is it not cash sales?
It is.
So for me, this is what I do. That 40% down
Yes, sir.
payment, I'll record it as cash sales. So under receipt from customers, I break it down into two. the down payment, which is the cash sales, right? That one it is straightforward. It's 40%, right? So straightforward, that 40% I record it because it's cash. So that I get easy marks, right? So that means that 40% down payment for January is cash sales because you are paying immediately. So 40% of the 110,000 sales that they've given us, right? That's 44,000. No be so. So immediately I record that 44,000. Then the next one, 40% of what? 132,000. I record it. That's 52,800. 40% of 140,000. That's 56,000. I record it straightforward. We real cash sales. Now there can a receipt from credit sales. Credit receipts. So that one will be the 60% left. They will show you how it will be done. They said 35% of this in the month following the sale, and the balance paid in the second month after the sales. And 10,000 of the receivables relates to November 2023 sales. You see, they've given us those ones. We don't need it yet. Let's pick easy marks first. They say monthly cost of sales represents 70% of each month's sales. Closing inventory at the end of each month are expected to be 60% of the month's cost of sales. Suppliers give 30 days credit. Monthly operating expenses will be 35% of sales, out of which fixed non-cash expenses is 10,000. These expenses are paid in the month in which they're incurred. So if it's 35% of sales and 10,000 is non-cash expenses, I believe this one there is easy to do, right? So straightforward, we can go and work them. So I think that we should do the monthly expenses. That one will be easier, right? So my workings, I will start my monthly what? My monthly operating expenses. And it says it is what? They said it's what? 35% of sales. Me what? True or false? Oh, please. Encourage me smaller. The question.
Monthly expenses, 35% of sales, out of which fixed non-cash expense is 10,000.
Yeah, so non-cash expenses, we have to take it out, right? Then we come and get the cash expenses. So once you get one, you can get it, right? So in that case, we are doing for only the first quarter. So January, we know that 35% of January sales, which is 110,000, will give us the total expense, right? That's 38,500, right?
500
You're telling us
minus
that
10,000.
So that's 28,500, right? So February, the same way, you take the 35% of what?
132,000.
132,000, right?
46,200.
46,200, right? But we take out that 10,000, no be so.
36,200.
Then match 35% of
49,000.
39,000, right? This one was very easy max. So straightforward. I go to payments and then I say was cash what? Cash expenses.
Expense.
First month was what? So it was 28,500. 28,500. 36,200. 36,200. 39,000. No, so that one I can put a working. I've worked for it. Easy marks. Then I come to this next working. They said the monthly cost of sales represents 70% of each month's sales. Okay. So let's go and work. That means we need something. What are we finding? What are we finding? Anytime
Cost of sales.
cost of sales, what do you use it to find?
Purchases.
Purchases. Thank you. So in that case, let's get our cost of sales for They said they give 30 months credit, 1 month credit. That means that the purchases we buy, we have to pay next month. That means we need December creditors, right? The December creditors is a figure we can use to come and get our missing figures. I like this. Anyway, let's get our cost of sales and let's see. Did they give us December sales? They give us December sales.
No.
But they told us that 10,000 of the receivables relates to November sales. They did. They gave us December sales. That means that these receivables was made up of opening balance, which related to November sales. They said this was 10,000. So the rest relates to December sales. Remember, receivables is uncollected sales. So if I take 10,000 out, that means 93,600 is December sales. Hey, I see it for. Better than this thing, how would it occur to students? Oh, but it's relatively simple. You need to be good with accounting data. Share. You must know what receivables mean. Receivables is uncollected sales, and they've told you that 10,000 of the receivables relates to November sales. It just said the account belongs to which month, because this one is brought forward, right? This is brought forward from December. So it means that if 10,000 relates to November, then the rest belong to what? December. That is it. So that means December sales are 93,600. And this one relates to December purchases. They've given it to us. But anyway, let's find the cost of sales. We can work it out and let's see. So in that case, cost of sales. So I will start from November, December. They didn't give you November for nothing. You see how the other cash budget, functional budget, the 4th month, they didn't ask, but when we ignored it, you see, we had to come back to work it again. So if they give you every month, you do all of them, then pick the month you need. Do you get it? So November, December, January, February, and March. That's why I tell you, budgets are there to waste your time. But anyway, I'll first put down my sales because that's what I'll need. This one is 10,000. This is 93 what? 600. This is what? 110,000. 132,000 and 140,000. Okay. So in that case, now they are telling us that cost of sales will be what? 70%. No be so. Is that not so?
Yeah.
So I need cost of sales for November. That'll be 7,000, right? December. That's 65,520. 110,000 times 70%. 77,000. 132,000 by 0.7. 92,400. 140,000 times 0.7.
28,000.
Good. So now we found this, right? So now that we have cost of sales, how do we get purchases? Because cost of sales is opening stock plus purchases minus what? Minus closing
stock.
The budgeting approach will always what? Take our cost of sales and add back what? Our closing stock. And less what? Opening stock. To come and get what? Purchases. Mokai. The purchases budget. You see the same idea here. It doesn't change. Once you know it, you know it. So now we need closing stock. And they are telling us that closing stock are expected to be what? Read for me. It's right in the question. Closing stock is expected to be what?
60% of the Man's cost of sales.
Yes. So in that case, closing stock is what? 0.6, 60% of the current month's cost of sales. What's the question? Anything, but it's mechanical. So 60% of 7,000, that gives us
200.
right? 4,2. And then closing stock for this month becomes opening stock for the next month. So you see why if you don't do the November, you have to come back and do it. That's also another trick. The next month, 60% of 65, 520.
39312.
312. Okay. Then
And
60%.
the opening stock for January.
Yes, that becomes opening stock for January. 46,200. That becomes opening stock for
55440.
55,440. So this one becomes opening stock again. No be so.
58,800.
This one is 58,800. Is that it?
Yes.
So we take it out. But what was the opening stock for this one? We didn't know. We don't really need it, right? So that's our purchases, right? So what do we get for the purchases?
For December, we have 100,632.
100,632. Then January. $77 plus
83,888.
83,888. $105,640. 98,000 plus 58,800. 55,440. 101,360. No be so. That's the purchases. But please, don't think that you have gotten the cash purchases. These purchases you have is not cash purchases. This is just purchases. We don't know how much is cash and how much is credit. So what we can do is that we can try the creditor's account. To see. So in the creditor's account, I think the last one was in December. In December, they gave us only the closing credit. Okay. Oh, this one, they've simplified it. They didn't have any way. So we can even use this one to get the purchases that we have. Let's just take it. That means it's cash. So in that case, this one that we have, our purchases that we have, let's just do January. This is January, February, March, right? Okay. So the December purchases becomes January, to be received in January. The January one will be received in February, and February one will be received in March. Do you know why?
30-day credit.
30-day credit. So this month will be paid next month will be paid the next month. So with these figures that we have now, this is what we are now going to use as our purchases, right? So payment for purchases. Or payment to suppliers, purchases. So we have what? 100,632. 100,632. 83,888. And then 105,640. Okay. That side is gone. So purchases. Now we need a credit receipts. They said the sales, 40% down payment, 35% of the month following the sales, and the next in the next month. Right? Okay. So in that case, let's go and get working for our sales. So and come and say sales receipt, right? So first of all, I always write my sales again, right? So that I don't get confused. So I'll put down my November, December, January, February, March, and then April, right? Okay. Because I need to get it. So the sales, let's write them again. We know that this one, the sales was how much? 10,000, right? December sales was what? 93,600.
93,000.
Then 110,000, 132,000, 140,000, right? Okay. So in that case, let's start the collections. So I'll start with November sales. So with November sales, we know that the sale, we take it what? We take it 40, 35, and then the rest will be what? 25. And I mean what? You all agree? So they say 40% down payment, 35 in the month following, and the balance, which will be what? 25. I bet this is 75. So the balance will be 25% in the next month. So it's 40, 35, 25. So that means November sales, 40 will be here, 35 will be in December, and then some will be in January. So you see, if you don't deal with November, because it's not part, because some will fall in January. So that means November. 40% of the 10,000, 4,000 will fall in the same November.
Hello, Prof.
Yes, boss.
With the November, is it the balance we are having there is in the balance sheet figure? So it's a closing figure.
It's not a closing.
So can you assume that the 40% was received and it was left with the 35.25? Because when they made this
10,000 of the receivables relate to November sales. Oh, that is the balance.
yes,
Receivables, that's the balance. That means that was what is left. That is the 60% left. Yes. That means that was the 60% that was left. If that was the 60% that was left, that means we should have grossed it up to get 100%. Do you get what I'm trying to say?
is it under the cost of sales?
Yes, that means that our cost of sales, we use the balance. Because if this 10,000 was balance, it means they've paid the 40% already. So this one was just equivalent to 60%. So we could have gotten the November sales gross. And the December to that would have been the balance. But someone tells here. Anyway.
Prof, say your discussion is saying understand no whole now who got try so pressure.
Don't pressure na ye fi. Eh, pressure na ya moka no. Pressure ni fi. Eh?
You don't know.
Ghana for your training you say exam is supposed to frustrate you. Munya drop na pressure chimo. So the actual November sales, no mean 16,667. Is that it?
Going to gross up the 100,000.
No, the 10,000.
At the 10,000.
Why is this thing not clean? Okay, empty power. So that gives me 16,667. Then the December to will gross it up because what we have is just the 60% left. We need the actual sale. 103,600. So 40% down payment into receivables now canon. That means it's what? That means that will be what? Times 100 divided by 60. That means
Like I'm lost.
172,667. You say you are lost.
Mm-hmm.
Why are you lost? Why are you lost?
I mean the balance expressing it, I'm engrossing it.
Let me explain.
Actually,
What's the question? No. Almost say 40% down payment, right? And then 35% following the month of sales, and then the balance paid in the second month. Into so balance beer. So balance beer. So balance nature say. Are you following? When you have any balance, that balance means
yes,
that it is what is left. And I'm about balance means
the
the aka. That means so much 40% down payment needed, and the balance aka is equivalent to 60%.
60%. Okay.
So I want the 100%. Oh, that's why I grossed it up back to 100. So there's 100, so that I can use it to work properly. Do you get it now?
My prof, with the December, I'm having 156,000.
Jose?
December,
Hmm?
I'm getting 156,000.
How did you get the 156?
I use your method, 93,600 divided by 0.6.
Yeah, it's 156,000. I went to use the whole figure. Okay. So now that we have this, 70% becomes our cost of sales, right? 70% becomes our cost of sales. Even you're saying?
One, 6, 6, 7.
11,667. Then 156,000 times 0.7. That's 109,200. 110,000 times 0.7. 77,000. 132,000 times 0.7. 92,400. 98,000. So we add our closing stock and less our opening stock. So this one, how much is our closing stock? They say 60% of the current month's cost of sales. So that means 60% of this cost of sales should give us, right? 11,667 by 0.6. 7,000. But this one, we still had that 7,000, right? Anyway. One on 200. This one is 65,520. 77,000 by 0.6. 46,200. 92,400 by 0.6. 55,440. 98,000 by 0.6. 58,800. So closing stock becomes opening stock here. 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 Okay. So in that case, what do we get? $109,200, that's 65,520 minus 7,000. I had 167,720. Is that correct? Is it correct?
Yes, please, it's correct. 167,720.
So 101,640. The 98,000 plus 58,800 minus 55,440. 101,360. Okay. In that case, this is all we need, this side, right? And in here for the purchases. But we know that this one will be paid in January. This one will be paid in February. This one will be paid in what? March. Not so.
So
No be so.
If it's so, 30 days credits.
so
But this 30 days credit, there's something weird. The creditors on the balance sheet relate to how much will be paid in the next month. So how we did it, you know, this 22,000 inventory should have been opening stock in January. But look at opening stock in January. Why is it 65,520? So your opening stock in January, no, should have been this, because this is the inventory, right? Closing balance in December. So January
Yeah.
should have been our opening stock. And
Mm, the inventory
yeah, it should have been our opening stock. Oh.
opening stock for January.
Hmm.
January, we're having opening stock of 65,520.
That means we started from the November.
Yes.
That is what is causing the. So maybe we can go with what they have given us. We can go with what they have given us. See our budgets are. So in January, yes, we'll do the January normal. But this opening stock, we have to change it to their 22, not this one. So we'll use the 22 that they gave us. Do you understand?
As the opening stock.
Yes, the opening stock. The 22 that they gave us. Because that's the inventory that the balance sheet has provided. So we go with that one. So it means that here we should have gone with 22,000 rather. Makes sense. And that gives us what?
26,200. 83,200. And 93,200.
We have 101,200. Oh, that means this ones remain the same. It's only here that we change the opening stock. Everything else is the same.
No, but the opening becomes the closing stock for the following month. Or
Oh, it's the closing that becomes the opening.
okay, so if January opening, okay,
So this
okay.
101,360. Okay. But wait, it was not necessary because they've already given us this payment. So they are telling us that these are the purchases, right? From January to what? These are the purchases from January to what? March.
March.
Okay. So in that case, we know that December purchases will be paid in January. So on the balance sheet, it will be a credit. So the December purchases should have been this 98,000, not this one. So creditors. That means that's the January purchases. December purchases, which will now go to January. That's 98. Do you understand?
Okay.
Then this one will now go to February as 101,200. Then February will now go into March as 101,640. So this is what should rather become our purchases on the cash budget. 98, 101,2, and 101,640. Now, our credit receipt. So November, we have already done the grossing up, right? So November sales is actually supposed to be 16,667. And this one, you said
But
it was 156,000. Was that one we're able to get what?
my
X
prof,
0.6.
with November and December, we can work with the balances by taking the remaining percentages.
Yes, but you see that November will fall in other
So
months.
November will take 25% to January. Then December we take 35% to January. Then 25 to February.
That one is, unless you are very smart. I like to go from scratch, that I have the full one. 40% goes to November, right? So I do 40% of 16,667. Then I just put this one here, 6,667 there. Then I know that 35% goes to where?
December.
You get it? Then I come and just do my 35% to December. 5,833. Then another 25% goes to January, remember? Which is 4,167. You see how I do it? Makes sense.
Yes, please.
I now come and take December sales. So December sales, so I know it to be what? 40, 35, 25, the same. So I know 40% goes to December. That's 0.4 by 156,000. That's 62,400. Right? Then 35% goes to what? January. That's 54,600. Then 25% goes to February. That's 39 what? 39,000. You see? Then I come to January sales. That one too, I know I'm going to take a what? 40, 35, 25. Right? So this and this will not come in. But I know that 40% I get it will be in what? %40 will be in what?
January. That's cash.
40% will be in January. And that how much? 0.4 by 0.4 by 110,000. That's 44,000. And then the next 35%, 38,500, right? And the next 25%, 27,500. And you come to February. February still the same 40, 35, 25. So 40% of February, 132,000. That's 52,800. Then the 35% remaining will end up in March. That's 46,200, right? Okay. Then March. So only the 40% that will go to March, right? But we've already recorded it. 40, 35, 25. No problem. You can still put it in your schedule. So only 40% of 140.4 by 140. The rest will fall in April. So this 56,000. Okay. So now if I put it together, I'll just draw a line here to show the ones that I need, right? So that's 4167 plus 54,600 plus 44,000 for January. That's 102,767, right? But I've already recorded that 40%, of the 44,000. I need to take it out. You understand? So that I only come and get the credit sales. Because I've already recorded my cash sales, right? So 39,000 plus 38,500 plus 52,800. That's 130,300, right? But I have to come and take out that 52,800, the February sales from it. Then March, I've already recorded the 40% that goes to March. So this is 102,767 minus 44,000. That's 58,767. Then 130,300 minus 52,800. That's 77,500. Okay, so 57,667. So this one, 58,767. Then this one, that is 77,500. 77,500. Then March, the credit receipt falls in the next month. So that is it. So we add March. 27,500 plus 46,200 plus that 56,000 we already have. That's 129,700. 129,700 minus the 56,000 that's already there. That's 73,700. So this becomes like our total cash receipts minus our total cash payment. You see why I tell you budgeting is a time waster? Have you yourself noticed?
Yes, sir.
Yes, I heard you, but Charlie, sometimes thinking far will consume all your energy in exam. That's why this should be your last question. Where will be piano? Now I quite now. Into who was one near stop work crown now. Unim say why then? Why be? Do you understand? Do you get my strategy?
Yes, sir.
Exactly.
Aha. Into what hono? I'm gonna stop work crown. Unim say at least what pick you figures maybe. You get it? Don't go and waste time on this, which is only 14 marks. Meanwhile, you could have done some ABC and throughput and some other things to get all your marks and you be on this thing. This question cry is very small. It becomes 20 marks. If I show you the old cash budget questions, you see that this one there is friendly. Some of them with bad debts and stuff. And then there are 4 products and the sales mix in the cash budget. Charlie? So now let's call this B. We have this as our A. In that case, what's the next thing? Our net receipt, right? Which would be our A minus B. In that case, this one will rather be a loss, right? 102,767 minus 126,500. That's a negative 23,733. Then we add our opening bank balance. That's 42,000.
2,000.
One 102,767 plus 130,300 plus 129,700. 362,767. Total payments, you're saying. 126,500 plus 137,400 plus 140,640. 404,540. 404,540. So this opening bank, I'll bring it here too. 42,000. Okay. So net receipt. The next one was what? 130,300 minus 137,400. This one too is a negative 71, right? And 129,700 minus 146,40. Negative 10,940. In that case, when we add, we should get our closing bank balance, right? Then like our bank account carry forward to the next month. So this one, that's minus 23,733 plus 42,000. That's positive 18,267. Now 18,267 becomes what? The opening bank balance for the next month. 18,267 minus 71. That gives us 11,167, which becomes the opening again, 11,167. So put it together, 10,940. That's 227. Okay. Now when we look at the net receipt from the top, 362,767 minus 404,540. You have 41,773. 42,000. What do you get?
That is negative.
No, this is negative, yes, but if you add it to 42,000, what do you get?
Two to 7.
A balance it. Yapon.
Prof, while we're solving, I observed something on the sales. You see, I said that we could use the 25%.
It will work. I know it will work, but I'm saying that unless the person is very smart.
No, what I'm saying, unless you gross it up, if you don't gross it up and use the balances, you get it wrong.
No, the balances you have to split. Let me show you. It will not be wrong. It means that 10,000, right?
Yeah.
That 10,000, you will split it this way. 35 out of 60. Okay. And then 25 out of 60. That's how you do it.
divided by 60 by the 10,000.
Yes, by the 10,000. That's how you split it. So that means you come and get 5833, which you now put in
Yes.
December. And then you can now
Yes.
come and do 10,000 times 55 out of 60, which will now give you
Yes.
4167, right? That's what I'm saying. If you are very smart, then you do that one. If
Okay.
it's the balances, then you take it over what it is, because originally it is 60%. So if you want to
Yeah.
split the 55 out of the 60 and then the 35 out of the 60. So
Okay.
that's why I said, always follow what I tell you. Just go simple. You'll be fine. If you want to be a hero in exam, you worry yourself. I've done all the methods and I've realized that going simple is always the best way. Even though it's long, you are guaranteed. If you go the short way and you make a mistake, you have to start all over again. You know that.
Yeah.
So that's MA. Please, as I'm teaching you, don't just be looking at what I'm always solving. Also, steal some of my techniques. That's how we learn. You get it? Now we have a techniques. Don't just focus on the answer, but how did Prof do this? Can I also try and replicate the same thing? Can I even come up with a shorter way? That's how we learn. Once I crowd the shorter method be a wow. Do you get it? So you see why budgeting can be a waste of time. But it's good you know. Tunya no it take you time. Last minute, why you be area no in your time? No what to boss and why? And yes, all right, shall be. You see, Obi wa not the first question or say okay master budget. Hey, Abuajida Costa.
Off work, now count 15 minutes.
Because the average budgeting question, they know a waste time. Until I say we're reducing marks. No, first budget about 25 marks. Imagine so many adjustments. Mamin Chawadi, be question way. Then we close. I've taken too much of your time, but I hope it was worth it.
Yes.
Look at November 2015. Or the Shedane Shade, that Brofre Limited or what we call it. Question number is it question? Question 2. Shade. Who the Shedane Shade? Obviously, a rabba Sheda Bodam. Look at this question. Here. 20. No be small work. Oh. No be small work be this. So this is a master budget. So Sunday, this will be the first question we go solve. Before we start looking at variances. So Sunday, I said we should push the time a little forward. I have a class at 6. So when do you want us to do the Sunday class? I believe if we start at 11, that will be fine. Or 12.
Okay.
That will be fine. But then the Romans, the sophomore and the pastors have closed.
Okay. So 12 it is. So Sunday 12, I should see you all on the call. I shifted the time because I expect everybody to participate. Because if you miss that session, it will worry you. As I said, me matron me exam you. May the Lord be with you.
Thank you.
Thank you, sir.
Please
Amen.
learn. Be solving the past questions. Until I say before or why?
Yeah.
Prof, I beg the board. Prof, and now from the senior.
I don't see you. Bye bye.
Mr. Member, and then the internship, I beg.
All right, bye.